What's going on, my Elegante FX team? Hope you're all doing good. Hope you all had a fantastic weekend, and hope you. Hope you guys. I hope you guys. When I say I hope you had a fantastic weekend, I hope that you had a productive weekend. Now, I know that I'm an advocate for, when it comes to trading, at least. I'm not talking about building a business. I'm not talking about. I'm talking about trading specifically. It is important that you get time away so that you can refocus your mind. So you can clear your head and everything, so that you can come back with a clear head and that you can trade properly. I'm telling you that is important. Trading isn't really like the other industries. When it comes to building a business and you're trying to build, $100 million brand, a big business, right? Multi-million-dollar company. And if you don't want to take it from me, you can take it from all the people, all the other people all over social media that talk about it. That is when you're going to have to work hard. Elegante FX, it has been some of the hardest work, not in terms of difficulty, but just working hard, producing content to you guys. It has been some of the most, I'm not going to lie, as much as I love producing content, I'm going to give it to you straight, it can be annoying. And what I mean by that is because I personally want to give the best content possible. I want to be sure that my team is happy, right? You guys aren't just customers to me. You guys are a team. And I want to be sure that I'm providing the best content. And sometimes that can be very, very difficult, especially when you're working in the point of, expansion and trying to fix, and trying to, get a website just perfect. And trying to create a content strategy that is good for everybody. It is very difficult, especially, and it's just the little things that really can piss me off. It's like, for example, my computer's rendering speed. It's not, it's not the best. It takes probably, for a 25-minute video or a 20-minute video, it probably takes a good 30 to 40 minutes just to render that video. So, last week for example, on Friday, when I tried to wake up and give you, I woke up at 7 a.m. Which is normal, but I sat here and recorded for a while. I sat and edited videos for a while, and because I'm doing most of that on my own right now. And we had a fucking problem with our damn posting on our website, and and personally, I think it's my fault because everybody else that is within our website can post content. So I do think it's something I'm doing. I can't figure out what the hell it is though, but I'm just saying it's like that when you're just trying to produce content, the best content possible, and shit happens that you can't really control, and all you can do is wait, and hope and rely on your team that's meant for working with web difficulties and things like that. It's just parts of building a business that is nothing but pure hard work and stuff that you maybe don't want to do, and things like that, because I want to make the customers happy. But when it comes to trading, what I'm trying to say here is trading. It's hard work at the beginning, right? It took me when I was getting started. It took me 2.5, 3 years of sitting in front of a chart, watching YouTube videos, and things like that, until I finally found a mentor that was meaningful. YouTube was bullshit and Google was bullshit. I know there are people who say, oh, you can find this stuff all over YouTube and shit like that, and Google. Not really, right? If you go and look, you're not going to get very meaningful teachings. It's going to be very, very confusing. They're just going to give you all this information. You're going to feel like you've taken in so much, like a little kid being sprayed in the mouth with a hose, and you're going to leave, and you're going to leave that video, and you're going to have no idea what to do. Which is why I think it's great to have something that's structured and that takes you from building blocks all the way up to advanced lessons to as a beginning trader, right? So that you can learn. That's the hard work part of a trader, is studying and learning, and consistently studying the past to prepare yourself for the future. And that's huge. So we are back. It is Sunday. You guys are watching this on Sunday evening. I'm recording this Sunday afternoon now. And we are getting ready for the week, right? These past couple weeks have been awesome in the markets, and we've had these crazy moves. The market structure has just been perfect. It's been fantastic for trading, and us as traders, we could not really ask for much better market market sentiment, market conditions. So today we're going to be recapping last week. We're going to go over technicals of this week, fundamentals of this week, and we're going to create a plan of action together. I haven't done this in a while. I haven't done one of these really structured, videos at the beginning of a week. I like to usually do these live, but as of right now, we're still making things work on our website. So live is out of the question. Let me get a drink here. So that's kind of where we're at right now. So last week, right, when it comes to USD JAPY, last week it was kind of it was more of a sideways motion. So what we had here is, indicators I have on my chart, in case you're wondering, are Bollinger Bands, 50 EMA, and 200 EMA, just mainly my trend indicators that I like to use. But once again, ultimately, if I had to, I could trade without these. I just like using them because I think it simplifies things. So USD JAPY, right? We are in this ultimate range in between 114.30 and 108.30. Last week, here's what we have. And by the way, I'm kind of going to combine the recap of last week and the technicals of this week kind of together. So just so you know that. So over the past couple weeks, we've retreated from 114.36. We were unable to break. 115 is that big number that we have not been able to test yet. And we came down, right? So if we look down on a lower time frame, you can see this larger move. We had that break in structure right here at this low. I have that marked out right here, 114, that break, retest, and then the continuation downward, break, retest, continuation downward. And now as we are sitting here, we are sitting at, this is our range, right? This is the range that we're coming back within. So I like to just trade off of those important pieces of price action. I think it's that simple, really. So here's what we have, right? We've broken this low, okay? We came down to this low right away. We broke that low, see right here, and we came down to this low. Found support and bounced all the way back up to these highs. We formed a minor bullish market structure. We held here. Came back down, and on Friday we closed bearish. I don't believe we closed below this low, though, so that's important. So we have this low here. This is where we're sitting at right now. We're below the 50 and the 20 EMA, and we're below the 200 EMA. We have a lot of bearish indications, and we're in shorter time frame bearish market structure. And we had a candle on this hourly time frame on Friday, breaking and close below 110.65. That's kind of that number right here. So if we can hold a retest of this level on a break, right? So if we can break it meaningfully, this is kind of what I'm looking for, right? I am looking for this. Break, retest, continuation downward, okay? That's kind of what I'm looking for, right? It's probably not going to happen exactly on those lines, but that's kind of what I'm looking for on USD JAPY. This has been one of those great pairs that has been so easy for technicals lately, that basically it's been nice, right? It's been pretty simple to trade. So we are stuck in between 112 and 110.65. That's kind of our range that we're within right now. According to most time frames, that bottom band here is opening up nicely. So I think that I am looking for it to go bearish. I think that'd be best case scenario. I like for it to finish out, an entire range before it decides to reverse back in an old direction. So look out for that bearish momentum to continue on USD JAPY. But if we don't, look for a break of 112.10, and then from there, we'll play the highs, right? We'll play this high, and then we'll play this high. So with that being said, let me clean up my chart. We don't need these lows anymore. What's important is if we break these highs, break that high, let's go for this high, then that high, and then the ultimate highs, okay? It's that simple. And then the ultimate bottom is 108. 108.80 is a nice round figure to target. So that could be a good swing trade setting up. If we look on the weekly time frame of this pair, you can see what's happening is we're getting tighter and tighter and tighter. You can see we have a lot of support right down in here. We have not only lows right here, but we also have a 200 EMA. We broke the 50 EMA last week, but we have that 200 EMA down here, and those Bollinger Bands are tightening. That upper one's going down nicely, so we'll have to see what happens. We might see a sideways week or a down week. Maybe if we can break and go down and test this week and test that bottom band and that 200 EMA, that might be a nice area to take profit and sit on our toes or sit on our hands until we can get further confirmations. So our next thing that we're going to look at is the dollar index, okay? So the dollar index on the weekly time frame, you can see, guys, we've been calling all these moves since back in this area, okay? We've been calling these down weeks for a while now. And are we? No, we are not open. Is that I can't tell if that's a candle right here that's open. I can't tell if that's a candle right there. But we've been calling these down weeks for a while now, ever since up in here, right? When we broke and retested and then came down, we have this primary trend line right here. We are well below the 50, well below the 20, and well below the 200 EMAs. And so that's, I mean, all of our trend indicators are pointing downwards. What's important here is if we scroll out, we broke this low, retested, and continue downwards. Okay, right here, broke it, retest, downwards. Thank you, Janet Yellen. I'm going to send you a thank you card for making this right here happen. So, what's next, right? The bottom band is still opened up downwards, right? And that top band is pointing down. So, I mean, that looks bearish as well. What I'm looking for is a test of 93 even. A lot of these lows came on these even figures, 92, 93, 94, 95, and 96, or 96.80, around that 97 area. So I'm looking for a test of 93 at least, right? We're yet to do that. And if we can break that, then I'll look for a test of 92. But remember, guys, all I do is I play those levels consistently. This is a consistent pattern that you're seeing with me, is I just play the damn levels, the simple levels. It's not that hard, and I mean, really, it's not hard, right? I'm being completely dead honest with you. It's not hard to do. It's not hard to get used to, and that's how trading should be. You need to keep it simple, stupid. You don't need a bunch of indicators on your chart. You don't need the ADX, the Ichimokus, and all that. I don't really even need the Bollinger Bands, right? It's all in the price action. I just think Bollinger Bands make it easier for me to identify, from right now what exactly we're doing, what we're going to do. So, I mean, a perfect example of that is right here. Okay, we're up at the bearish trend line. The top trend line is pointing downwards, steep as a mofo, and buyers came in and sellers beat you. So, I mean, we're probably going to go down from here and test the bottom band at least. And what do you know? We get the bottom band. Same thing right here. Not the same thing here. Bottom band was kind of open, but Bollinger Bands is one of those indicators that if you study them for years, you're going to get an idea and you're just going to know how to read them, right? You're just going to get an intuition. Okay, Bollinger Band's not opening convincingly here, so we're probably going to go down. We have price action resistance, we have the 50 EMA, we have a trend line. We're probably going to go down from here, right? That bottom or that upper band just isn't expanding enough for buyers to keep coming in. All right? So we can take these off of our chart right here. We can take this off of our chart. We can even take this off of our chart. So we're going to leave these. These are our levels that we're looking at right now. And something that's very interesting on the dollar index, you guys, is you can see that on the monthly time frame, we have a very flat upper band, which means not much upside. If anything, we're going to range, and it's not going to be much upside potential. But look this. Okay, we're testing the 50 EMA, but look at that bottom band right there. Okay, I'm going to make these thicker. I'm going to make these so you can see them a little bit better. That lower band, okay, see how it's starting to open up and coil downwards, right, cross below that 50 EMA. So that's going to be important, right, because what this means is I like to think of my Bollinger Bands as a gateway, okay? It's an indicator of volatility, and it's a gateway. So see, if we were to move up, right, and this band stayed flat, that means that the gateways are not open, right? Like, you're not going to heaven, man. Like, you're staying down right where you're at. The doors are not open. You're not moving. Traffic's, roads closed. You're not going anywhere. You get the point. It's not going anywhere. So what we have here is, okay, it's opening up. It's saying, hey, it's opening up that room for you to move. It's saying, hey, come this way. We are opening the doors. It's like pulling price in with the band. And you can see, examples of that are, like right here, when we broke out of these highs right here from the 2013 highs in 2014, when we broke out, look, that upper band is coiling upwards. It's saying, okay, I'm opening this up for you. I want you to go. Construction's over, the highway's open, traffic can start to flow again. That's a bad analogy, but here it is. It's flowing again, right? It went straight up. This is a classic look at this. This is a classic range-bound trade, right? You had this range, we were sideways for a couple of years, and then boom, we run up and hit the liquidity, all that, take traders out, boom, and you continue downwards. It's basic market cycles, okay, guys? So that's what we're looking at now on the dollar index. I think that bearish price momentum is possible, but there are a lot of sellers, and there are a ton of sellers coming into the market. So you have to reverse engineer it, and I don't want to get too complicated here. But, that's really kind of what's important. You have to reverse engineer that psychology. If everybody's getting into sells, the banks in the market is going to know that, right? The professionals, the institutions, the central banks. they're gonna make sure that you lose money, right? That's what the primary goal of the market is, to take your money as quickly as possible. And I'm not some crazy conspiracy theorist. That is what it is. So that's kind of what we're gonna have to look out for on the dollar index and be careful of. If we break 92, well, chances are we're going to test 80. Okay, the chances are. I mean, that's just what the chances are. At least 83, around this area, this range, before the crazy 2014 rally that we had. So we'll have to watch out for that on dollar index. But it's looking bearish in my eyes. I mean, as soon as I say that, of course, it's probably going to rally up to 120, and just screw me over into the all-time highs. But I'm pretty confident in my analysis that we're going to probably see lower prices. All right. So with that being said, now that we have an idea of what we're looking for on the dollar index, let's take a look here at the Euro USD. This is some beautiful price action. Okay, these are trades that are opening up. And sorry about that. That's my antivirus. So these are some trades that are setting up for long-term players that like the swing trades, right? So they like trades like this. They don't like these areas, right, where the market is sideways, people getting fucked over, and things like that. I'm gonna pause right here just for a quick little interjection. I am a human. I'm a person who is just a natural kind of. I'm a natural. It's not necessarily a good thing. I'm a natural cusser, right? I like to use that language. I feel like it gets attention, but that's just kind of who I am. Just to get it out of the way, I don't mean to offend any of you. It's just who I am, okay? And I'm not going to apologize for it. That's just who I am. I always will do it. So just so you know, I'm going to interject there because people on my team, some of them are trying to tell me, stop doing that, try to be professional. That's just, it's not me, right? It's just all the big people, all the influencers on social media, they don't give a shit what people are saying about them and how politically correct they need to be or how professional they need to be. That's just not who I am. My content, just know it's not my goal to offend you. It's just, it's just who I am. It's how I talk. So, back to what matters here. With Euro USD, and we're setting up a lot of these trades, right? But we have a lot of resistance here on the monthly candle. If we can close this week above the 50 EMA, that's good. That's a good bullish confirmation again. But if we can keep running, I'll look for 120. That's going to be a big round figure, and when that breaks, that's going to be the big, that's when a lot of investors, a lot of traders are going to be like, okay, there's a big damn shift coming, and we got to get ready. So definitely that bullish bias on Euro USD is what I'm gonna continue to hold, and we'll have to see what happens from here. So pound USD, this thing is just such a pain in the ass, and you can see that every time it breaks this shit, it goes right back down, and it's so fucking sideways, and it's getting annoying. I'm still confident in that it's going to test up here eventually, but you can see this bullshit. I don't want to trade this. This isn't fun. This is very confusing. If you look at it on an intraday time frame, how the hell do you trade that, right? What is there to trade here? There's nothing that interests me, so I'd rather just focus on the quality trades. AUD USD could be a possible quality trade with these breaks that it's been having. So we broke this, right? This is actually a weekly time frame trade. We broke this, okay? Now we're up here, and now we're testing that 200 EMA. We did not break it last week. We'll have to see what happens here, but it's posing resistance here. There's not much resistance here in terms of price action. There's not much resistance in terms of price action until we get to 80, which is a nice round psychological number, which is what we'll have to get at. But there's a nice market cycle occurring right here too, so that's something that's going to be interesting as of right now. But we're testing that 200 EMA, so and there's resistance here for sure. And so we'll have to see what happens here. If we can break and close above that, look for a test of the 80 level, or at least this market structure level right here. And then from there, it's really off to the races here. So there's a lot of market shifts happening right now. So my goal here is what I'm hoping is that we don't just reverse back into these ranges that we were in. We were in this range for a while since we were in this range since summer of 2015. We were in this range on Euro USD for 2.5 years. We were in the dollar index was ranging for a while. You know, we've just been ranging, right? Let's get into some long-term swing trades that, you know, we haven't seen in a while. These kinds of trades, that kind of trade, this kind of trade, not these kinds of trades, right? We've been in that day trading scenario for a while now, right? And where it's just not much swing trade opportunities except for day trades. So we're starting to see some of those shifts in the market cycles, and we'll have to see what happens because we're getting around that September, October time, guys. You know, it's going to be here before we know it. And I talk about the market cycle all the time, right? It's where, you know, okay, like we have, you know, every about 7 to 10 years we get a very big market correction, and it's usually somewhere in the lines of 30 to 40% if it's bad, over 50%, and some of the worst case scenarios 60 to 70%. We get those crazy corrections in terms of the moves, right? So that's kind of what I'm looking for is, and you know, when we get those corrections, you know, you'll see it everywhere. But you know, it's bound to happen. It's not a matter of if, it's a matter of when. All right. So USD Swiss, I'm not fucking with it. I'm not interested in it right now. It's not interesting me, except for, you know, we had this crazy up week. If I look at the daily, yeah, just nothing here on the USD Swiss for me. Nothing here on. Let's actually, NZD USD is the same as AUD USD. USD CAD, this is a good one. So let's take this out to the weekly. It'll be easier to see. So USD CAD closed below the 200 EMA, not very convincing. So we'll have to be careful on how we you know, move with this. But here's what's big with USD CAD, right? We've been going down now for about three months straight now, and we've been basically 3 months straight of just down weeks, consistent down weeks. And we're sitting right around 125, 124, that area on the weekly time frame, which is a nice big low. It's an important market structure low. So if we can hold below here, which we technically did, but if we can continue downwards and put a follow-through candle in, I see 122 and basically 120, basically in our sights, right? That's where I think we'll definitely head towards. And the 20 is looking like it's about to cross under the mid Bollinger Band, guys, is just a 20 SMA. So it looks like that's about to cross under the 50 EMA. So we'll have to look out for that. I'm definitely bearish on USD CAD still, as we consistently make lower highs and lower lows on these weekly candles, as you can see. You can see here last week we ended up ranging at the later part of the week. So on this here we broke here, then continued downwards and found support again at this low. So we want to break this low on that lower time frame before we can even continue downwards on the weekly time frame. So we've just been straight down bearish for a while, so we'll have to see what happens on USD CAD. I'm still convinced with that bearish momentum. If we look at the monthly time frame, you can see once again that bottom band is opening up that gateway and that upper band is coiling up, which suggests that more volatility is being injected into the market. So we'll have to see what happens there. But definitely keep your eyes out, and we're right on some big support, the 50 and the 200 right here. So definitely keep your eyes out here on USD CAD. Gold. So this is important, right? That upper band is not, and these Bollinger Bands right now suggest nothing but bullish price action. We're still going up, we're riding that upper band. This one's coiling downwards, saying, okay, there's nice volatility being injected, there's volume here. So basically what I'm looking at is, okay, on the 60-minute time frame, right, we've been breaking these levels, right? I have this level noted, I have this level should be noted, but I don't know why that's not noted. I don't know why I don't have that drawn there. So basically, what's important here is I forgot to note this level here. So we broke this level, we tested this level. We retested, rallied. Broke this level now. What could happen now is we retest there and re-rally up to here. That's what I'd be looking for the first part of the week, right, to see if we can get that done. Maybe we go up a little bit more, retest, and then rally. That would be a decent move on gold. There could definitely be a nice buy-side trade on near 1266.70 there on gold. But over the long term, what I'm looking at here is on the this is a weekly time frame. Let's go back to that daily time frame, not the 14-minute chart. That's definitely not what I want. So we're consistently breaking these areas, and we're consistently testing these highs. It definitely looks like we have the potential to rally more over this week, maybe a couple days. Something that's interesting, though, also the 50 found support on that 200 EMA, so everything looks definitely bullish in this scenario. If we look on the weekly, Bollinger Bands are getting tight, right? Look at that. So I'm going to delete this because it's just in our way right now. This one's pushing up. This one's kind of flat out. So Basically, here's what that is. Here's what that kind of means. I think the bottom band is going to give price support and help it rally up to these highs again. And we're going to find resistance here again, or we're going to break and that upper band's going to begin to rally, and we might be able to test the 1300 area, the 1320 area, areas from way back here, post-election, pre-election, 2016. But as of right now, at the immediate time frame, I'm remaining bullish because we do have that bullish market structure: higher high, higher high, higher high, higher low, higher low, higher low, and that upper band is expanding. We have that support from the 50 and the 200 EMA holding price, and we're consistently making successful retests and rallying for decent trades. So look out for the buy side to continue on gold this week. Oil. Okay, so this is this is another good notification, I guess, if you will. We on oil are at a very important state. Okay, why are we? What's important right now on oil? This trend line is big, right? We've had 1, 2, 3. This is now our 4th time touching this bearish trend line. We're in this downward channel right here. Okay, and we have bullish market structure right now. If we go down on our lower time frame, you can see that. Okay. We tested this high, continued upward. Tested this high, broke, continued upwards. Broke this high, and now we're about halfway up this way near the 50 level, right? So 50 is right here. That's a big resistance level. But on the long term, what's important is we did cross above the 200 EMA. That is important. We're right on that trend line. We're testing that trend line right now. So here's what's either going to happen. We're going to start to consolidate here, and we're going to go sideways, and then we're going to resume downwards, or we're going to break this trend line, and we're going to go up and test the 52 area. If we look at the weekly time frame and see what Bollinger Bands are suggesting, this one's coiling upwards. Okay, so that's suggesting, okay, we got a really nice candle this week. So that's what's going to be important here. We had a nice bullish candle this week. Upper band is coiling upwards. If we look on the monthly, if it's even necessary, it's just sideways, right? It's there's nothing big here. We don't need to take any of that into consideration. So this is going to be important. We're either going to break this trend line and we're going to rally up to 52, or we're going to hold this trend line and we're going to go back down towards 42. Okay, those are your options. We need to be patient, and we need to see which one of those scenarios plays out. Be patient in the market. I'm not kidding. It's one of the most important lessons you're ever going to, let the market tell you what it's going to do, and then play with it and try to catch a piece of that move. That we do not need that anymore, or that. Nope. We do need that. So here's what I'd look for on oil. Let's look for the important low here. I'd look for, okay, if we break this, we'll probably test this, and if we break that, we'll probably test that, and if we break that, we'll probably test that, and if we break that, we'll probably test that. So these are the market structure areas to take into consideration and to make sure that we don't break these in reverse. If we hold and then break here, hold this trend line and then break here and continue downwards, I'd just look for shorts all the way down on these levels, okay? I think that's definitely the way to approach it here. But right now we're kind of at that decision spot. Okay, it's going to decide here what it really is going to do here. Okay. So with that being said, guys, that's going to wrap up the analysis part of this session. We're going to head over to investing.com, and we are going to check out their economic calendar and see what the market has in store for us this week in terms of what am I trying to say? In terms of fundamental events. Okay. We want it to only be high impact events. And we don't care about any of the crazy China manufacturing. That could be important for stock markets, home sales here. ISM manufacturing, that's going to be important. Let's see I talked about ISM manufacturing index a while back to kind of see what's happening here. We had consistent 3 months actually we had 1, 2, 3, 4. we had 4 months of consistent downward movement. So we came up, we peaked, and then we can actually continue downwards. But now we were actually seeing growth again and stimulation into the economy. In terms of manufacturing, I haven't read these reports, in depth in a while. So because I still think price action is just the biggest piece that that helps me. I need to figure out a way to move this box so that I can go back, and I need to go back. So ISM manufacturing. Don't care about India. I think that's India. I have no idea. Non-farm payrolls. That's our biggest move. Okay, so employment numbers come out on Friday, so that's obviously an obvious one. First Friday of the month. So that's going to be our most important number. We'll have to see what happens. Basically, we can predict this actually if we wanted to. I'm not the best at doing. I'm not a big fan of doing that. Basically, all you have to do is you take your what's it called? It's the unemployment insurance numbers, and if that number grew, then the job number is probably going to decline. So over the 4 weeks, it's probably going to decline. So that's something that you can use to predict that and get an idea of what's going to happen. Don't trade it. Okay, it's a bad idea. I made that mistake again. I was very confident that the number was going to go a certain way, and I got fucked. I woke up. I was short. I remember exactly. I was short the dollar yen. I woke up and boom, I was fucked because it moved 120 pips because the NFP number was totally the opposite of what I had expected. And you never know what the fuck it's going to be. So just be careful with doing that. You get an idea of what's going to happen, but anyways, so what's our plan of action this week, okay? We're going to be looking for moves on the dollar index to continue towards 93 and see if we can get a break and head towards 92. Euro USD is broken 117 and closed above it officially on the weekly, so we're going to see if we can continue this strength on the monthly time frame as those Bollinger Bands begin to open up. Dollar yen is continuing downwards and has been bearish. It is yet to break 110.60. If it breaks there with these bottom bands opening up like this and it's just price riding it, we're going to see if we can get a test of 108.80. Pound USD we are flat on because it has been bullshitting us this entire time. Even though we're still confident in that, we're not confident. I think the bullish scenario is definitely more likely than the bearish scenario. AUD USD has broken out of its range as well, following dollar index declines. We're seeing if we can break the 79 and that 80 area and that resistance on the weekly, which is the 200 EMA and Bollinger Bands, and we're seeing if we can break that to rally up and test 82. USD Swiss we're flat on. NZD USD is basically the same as AUD USD. USD CAD has broken below 124 area, the 124 area, but not convincingly. So we're going to wait to see if we can get a follow-through candle to test 122 and 120. Gold, we have been rallying and we have been within this range now for about 4 or 5 months. So as our 3 or 4 months, that area, we form bullish market structure on the lower time frame. So we're going to continue to play that and see what happens when we get up towards that 1300 area. But as of right now, we're going to hold that bullish scenario. And oil, we're going to wait to see what the market wants to do at this current primary trend line, okay? For me, I'm not going to risk more than 2% of my account. I never do. Have a plan of action for each day, each week. When you wake up, when you get up every Sunday evening, be ready for every scenario. Plan out your risk. I'm not going to risk more than 2% at one point with trades. If I have to split that 0.5% on 4 trades, 1% on 2 trades, or 2% on 1 trade, that is what I'm going to do. Stick to it. Do not risk 10% of your account because you think it's going to go this way for sure. It will probably bite you in the ass just to teach you a lesson. Everybody have a fantastic week. Have a fantastic end to your weekend, and I'll see you on the next video. Thanks, guys.